Wednesday had an up day. Nifty recorded strong gains. So did Bank Nifty. But thereafter, Thursday and Friday registered very strong candles. Rather, I would say it this way, on Friday, a high wave candle has been created. What's up for Nifty next week? Let's see. Welcome to the weekend review of Nifty of week beginning 14th of December 2020. For disclaimer, please refer to my website chartvideo.com/disclaimer. A white candle on Wednesday was recorded, and thereafter on Thursdays and Fridays, the bodies of the candle were small but had huge volatility on both sides. On Friday, we did have a high wave candle where Nifty swung from 13,579 on the higher side to 13,402 on the lower side. By any means, for coming days, these two levels should be closely watched out for. Above 13,579, we can jolly well expect another 150 to 160 points on the upside, and 13,402 might be taken as a level where this particular trend on the short-term basis might be terminated. Let's see the indicators and what they are indicating. Nifty is well into overbought territory. Right now, RSI is placed at 76. When market is at a very high level, and in that time RSI goes deep into the overbought territory, smashing all the divergence it had exhibited earlier, this particular movement is called as divergence trap. I had asked on Twitter yesterday, what is the divergence trap? Let me explain it to you again. When market is at an exorbitantly high level, the divergences which we were seeing earlier vanishes, and the RSI moves deep into the overbought area. This particular phenomenon is called as divergence trap. Generally, looking at these types of levels in RSI, people tend to go short at any single day. They are caught on the wrong foot because the trend is strongly up. Once they start short covering, the next rally comes up again. This continues for, well, I would say it this way, perhaps a week or so, perhaps a little more than that, but whatever be it, we have to accept it, and till you get some indication from price action, you should not go short. The trend is up. If you are uncomfortable, stay away. What is ADX saying? Well, ADX, which had flattened itself out the previous week, had again started moving up, and right now, well, I would say it this way, at around 45 seems a little elevated level by any means. Well, but all the same, this also is indicating that we are in an uptrend. Well, when plus DI shows minute signs of negative divergences, the same is not supported by ADX. Any reaction is generally short-term in nature. Let's see what happens in coming days. If we go to the hourly charts of Nifty future 1 month, what we see is again negative divergence is there, but in this particular place Nifty's RSI has come to the equilibrium line. Equilibrium line by itself has its own importance. If the indicator manages to stay above the equilibrium zone, moves past the 60-62 level again, in that case we can expect the upside trend to continue. And if there is a failure in this particular indicator to stay above the equilibrium line, we might get a downside swing. As of now, what I'll be watching out is the negative divergence which is being indicated here, along with the price Well, in this hourly chart, it seems that the trend will break if we get a close below Friday's low of 13,402. What is the ADX in hourly chart indicating? ADX in hourly chart had moved up after a divergence, and during that divergence it had moved up with plus DMI as the dominant DMI. We did get an uptrend because of that. Right now, somewhere down the line, the ADX is cooling off. Well, it is at 26 odd levels. In case if it moves below the 20 levels, a trading market may come up, or if it moves again on the upside, we have to watch out, take trade in the direction of the dominant DMI. In contrast to the 60 minutes Nifty trend on ADX, if we study ADX on a 30-minute scale, we are getting a different picture. Let us see what we are getting right now. The MDI has crossed above the opposite peak of PDI. This is somewhere down the line a negative signal. If this continues after some movement here at this zone and then MDI moves up along with the ADX, it might give you a signal for the short side. As of now, after the crossover, particularly the bar in which the crossover took place happened to be the lowest bar, and well, I would say not the lowest bar, but the second lowest bar. In that case, perhaps the trade could also might have been initiated, and the stop loss would be the swing high, and on the downside, the momentum increases once this particular swing low is violated. Well, on a very short term time frame, I would like to take it this way, that if the high wave candle's low is violated, Nifty may move down and test the high of 13,145. Till the low is not violated and Nifty continues to move up, well, being at all-time high, resistances are few and far between. Whatever resistances come up are generally taken out in a day or 2 days time, and the movement continues to move up. There might be resting time for the bulls, but since the trend is up, I would by any means not go for any short trades till the market gives me a signal. Moving on to the derivative segment, the put call ratio, which was at 1.73 on Wednesday, had cooled itself down to 1.52 in the next 2 days. The fall in put call ratio can be attributed to two reasons. One, the weak bulls may have liquidated their long trades, or the option writers expects a trading market from these places now and do not expect the market to move up in a major way. Let's see, but all means I would say it this way, most likely the option writers are expecting a trading market in coming days, and that is why the sharp fall in this particular put call ratio has come up. Well, here is a small clip which has commercial interest for me. View it and then we proceed. Demystifying Candlesticks, a comprehensive course on Japanese candlesticks. It consists of two videos, the first one devoted to nomenclature and examples of same in the stocks and indices. The second video covers blended candles in details with examples of how it can be used effectively by traders. Thorough discussion on gaps and windows has been done for traders to get that extra short. Candlestick rules in support resistance have been discussed along with examples where trading opportunity arises. Candlesticks have been combined with trend lines, moving averages, RSI and ADX to sharpen and plan trading strategies. Do enroll and get started instantly to enrich yourself by demystifying candlesticks from the comfort of home at an extremely reasonable price. Welcome back. Moving on to the open interest interpretation, I would say it this way, Nifty from 12,100 levels. If we go back a little, right from 12,100 levels from 5th of November, well, it is moving up and right now is at 13,500. In the process, the open interest has shown increase, more or less increase gradually, leave alone some 2 or 3 days of almost the flattish type of a put call ratio and one bull liquidation seen here. Overall, if we take it this way, the open interest is on the rise. The price rising, the open interest rising. By any means, I would take it this way that well, the trend is up. One way you can also interpret it this way, since bull liquidation had taken place on Thursday where 5.46% open interest had fallen, you can keep that particular day's low as your stop loss for coming trades. Bank Nifty 2 after Wednesday had small bodies on Friday, it did have quite a long candle. The difference between the two candles is almost of 500 odd points, and I would say it this way, I would like to watch out which way the index moves, whether it takes out the high or breaks the low, and thereafter the trend will be decided. One thing is for sure that on Thursday the low of Bank Nifty of 30,202 corresponded very near to 30,197 high, which was registered on 25th of November. Should it break this 30,200, I would say, well, allow some filter for it, allow some time, and should it break 30,205, well, in that case, we might head for some sort of correction. Here too, if we see the open interest interpretation, almost the same mirror image is reflected as that of Nifty. There was some bull liquidation on Thursday, well, minute or rather flat open interest on Friday. So I would keep a watch on this particular day's low, 30,200 to be precise. If 30,200 is violated, well, a short-term correction may come up into the index, else we are headed for the upside. Well, where to on the upside? Resistances come, but they will be taken out in bull market. So let's not take a particular level in mind. Just take it this way, unless or until price does not give me any confirmation, the move will continue to remain up. 30,200 for Bank Nifty with some time filter, 13,400 for Nifty with some time filter will be my level where I will confirm myself, well, some reversal has taken place. So much so for today. See you again next week. Have a great weekend.